Global markets head into Tuesday in a relatively cautious mood after a session that saw a dramatic collapse in oil prices fail to trigger the broader cross asset moves many would have expected. While crude fell sharply on growing optimism that tensions between the United States and Iran may not escalate into a broader regional conflict, investors have remained reluctant to fully embrace a risk on narrative, highlighting geopolitical uncertainty is still very much alive. The dollar remains broadly resilient despite the sharp decline in energy prices and modestly lower treasury yields. Normally, softer oil would weigh on the greenback and support a stronger rally in bonds, but markets continue to focus squarely on this week's Federal Reserve decision. While no policy change is expected, investors are looking for confirmation that the Fed remains biased towards tighter policy should inflation risks persist. Markets continue to assign a meaningful probability of another rate hike over the coming meetings, helping to keep U.S. yields elevated and the dollar supported. Looking ahead, all eyes turn to the already mentioned Wednesday Federal Reserve decision, with markets expecting rates to remain unchanged, but watching closely for any shift in Fed Chair Warsh's guidance. Ahead of that, investors will continue monitoring developments in the Middle East, Treasury supply, incoming U.S. economic data, and the latest round of corporate earnings, all of which have the potential to shape sentiment into the middle of the week. That's all for now.